How to invest your first $1,000. Investors no longer hold their shares since stock prices alone barely slightly affect them. Despite the fact that $1,000 may not seem like much in the big picture, you may build up your savings over time and improve your family's financial situation. Being a new investor is really more affordable and simpler than ever, and there are many fantastic ways to get started. In fact, some of the finest methods to invest $1,000 will let you fast grow your cash. For instance, you could be able to get a return of around 50% almost immediately on your money with the help of specific incentives while still having access to high-yield investments. Offers numerous options for how to invest $1,000 and explains how to choose the one that would be most suitable for you. While certain investments may provide higher rewards, they also carry a higher risk. Such investments are worthwhile to think about if your financial safety net allows for this risk. Otherwise, you can use your $1,000 to make that right. 1. Buy an S&P 500 index fund. Purchasing an index fund based on the Standard & Poor's 500 index, a compilation of around 500 of America's most prosperous corporations, is at the top of the list. Over time, the index has generated returns that have averaged around 10%, allowing you to double your money in just over 7 years. It's an excellent choice for novice investors since it provides rapid diversification, which lowers risk, and you'll get to own some of the finest corporations in the world. In fact, renowned investor Warren Buffett contends that purchasing and maintaining an S&P 500 fund is the wisest course of action for the majority of investors. 2. Buy partial shares in 5 stocks. Purchase a group of 5 companies after doing your research if you want to add some variety to your portfolio and have a longer time horizon for investing. But if you don't know what you're investing in, an S&P 500 index fund might be a better choice. Additionally, your collection of 5 equities is probably going to be much more volatile. Much more expensive than an index fund, but that's a cost of investing in individual stocks. If you choose one of the finest brokers for fractional shares, you won't even need to be concerned about having enough cash to purchase complete shares of each stock. Additionally, since you might be able to gain a little extra money, you should look into the top brokerage incentives for new investors. 3. Put it in an IRA. The potential return from investing in a retirement account is among the highest. If you choose a regular IRA and fall under the income restrictions, you may deduct any income taxes you would otherwise pay on that $1,000. Taxes on your earnings might also be put off for as long as 20 years. Bonuses can also make something more enticing. This tactic can be combined with the aforementioned account opening bonus. Additionally, you might be able to benefit from the little-known Savers Credit, which provides a tax credit of up to 50%. If you file your taxes jointly with your spouse or as an individual for $21,750 and make less than $43,500 in 2023 per year. Depending on your income, even if you earn more than these thresholds, you can still be eligible for credits of 10 or 20%. 4. Get a match in your 401k. If you have a 401k or 403(b) retirement plan offered by your company, determine whether any contributions you make to the account are matched by your employer. For instance, some employers may match 50% of your contributions up to 4% of your pay. Therefore, if you contributed 8% of your gross compensation, the employer would immediately contribute 4%. It makes sense to do so since this free money is some of the simplest money you'll ever earn. Unlike the other tactics below, you don't just deposit money into an account to employ this one. You must postpone the funds from your paycheck instead. However, you can also benefit from the Savers Credit in this situation as an extra incentive. Therefore, depending on your income, it may be feasible to get a 100% return with no risk at all. 5. Have a robo-advisor invest for you. Do you hesitate to make your own investments? You may delegate all the labor-intensive tasks to a robot advisor. A portfolio can be chosen by the robo-advisor depending on your risk tolerance, and it operates on the same principles that a human counselor would when you need the money. The top robo-advisors also provide you access to calculators and other understanding aids. Additionally, they provide reliable cash management accounts with a wealth of options. The majority of accounts allow you to start off without any funds, and opening one only takes a few minutes. 6. Pay down your credit card or other loan. Paying off debt, particularly high-interest credit card debt, is the most safest return of any investment on our list. If you're paying 25% or even 30% on your credit cards, that is money that might be in your pocket instead. In fact, it makes sense to prioritize investing after paying off as much of your high-interest debt as you can. 7. Go super safe with a high-yield savings account. You shouldn't lock your money up in a contract if you require access to it sooner than a few years. A significant investment like a stock that can go sharply down just as you need the money. Choose a super safe alternative instead, such a high-yield savings account. The greatest yields in the nation are simple to identify, and these accounts are now delivering some of the highest returns in years. Most online banks have high-yield savings accounts, and if you ever need the money, you may get it right now. 8. Build up a passive business. Yes, you might be able to start a passive business with just $1,000. Particularly if you spend a lot of sweat equity, effort, into getting it going. Find a market that you are passionate about, and then start a website or online course about it. If you put in the initial work, many passive enterprises have little capital requirements. You have a ton of alternatives for a passive company, such investing in real estate or issuing microloans through a crowdfunding site. 9. Open a 529 account. Investing in a 529 plan if you or a loved one may eventually attend college. Account can aid in its growth while lowering the cost of any future educational costs. Taxes aren't applied to any withdrawals from the account that go for legitimate school costs. For parents who could be responsible for paying for a child's education, that is a desirable scenario. Additionally, 2022 feet makes funding a 529 account less difficult. Starting in 2024, any funds in the account may be converted without incurring a fee into a Roth IRA. Commercial paper and treasury notes are regarded as some of the safest assets. MMFs pay dividends every month. Usually, the yield is comparable to or somewhat greater than that of bank savings accounts. This is a highly liquid choice as well. You may take your investment money out at any moment. If you find this video useful, don't forget to like and subscribe to our channel.